Welcome back to the cryptowrld channel, everyone. My name is Josh and I have a very important chart to show you at the end of this video, so definitely stick around for that. But first, just starting off with the 12-hour Ethereum chart, and what we're seeing at the moment is a decent short-term recovery after that short-term cool-off. And if you're looking at the MACD, recently we saw a bearish cross, but we are not seeing a lot of bearish momentum if you're looking in the histogram within the MACD indicator. So this bearish cross so far has turned out to be a very weak bearish cross. And if you're looking in the 12-hour Ethereum RSI, of course, we've seen that short-term pullback towards neutral values, which is what we were looking for over the past few days, because only just a few days ago, the 12-hour Ethereum RSI was sitting in overbought territories, so the room to the upside in the immediate short term was very limited. So it's actually very good to see these short-term cool-offs in the middle of an uptrend, because when that is happening, the uptrend can last longer, and of course, we can go higher if the uptrend is lasting longer. And while we're on the 12-hour Ethereum chart, of course, the $4,000 price target is technically still active on the chart. But if you're zooming out to the daily Ethereum chart, we have some important resistance between the current price and that $4,000 price target, which is of course the golden pocket, and that is coming in at around 3,500, going up towards around 3.6k. So even though Ethereum is playing out a short-term bullish move just today, we are still not above this important point of resistance, so keep that in mind. But if you zoom out to the 3-day Ethereum chart, of course we are still seeing these bullish reversals in the RSI and the MACD, and historically speaking, this has been very bullish for the price of Ethereum on the larger timeframes, but we still have that important level of resistance in the 3-day Ethereum RSI, which is right now coming in at around 60 in the RSI, and it is very important we break above that resistance, because if you simply take a look at the last 3 times where we've seen a rejection from that line of resistance, that has resulted in a lot more bearish price action in the price of Ethereum on the larger timeframes. So as of right now, when you're talking about the 3-day Ethereum RSI, nothing has been decided, so we're still in this deciding moment, which is why it is important to pay attention to this moving forward over the next few days at the very least. But if you zoom all the way out to the weekly time frame, right now in the weekly Ethereum MACD, we're getting very close to another bullish cross. And just based on the current trend, it is most likely we're going to see a bullish cross in the weekly MACD within about 1 week. But then after we eventually see that bullish cross in the weekly Ethereum MACD, we also need to see a weekly candle close to actually confirm that bullish cross in place. And of course, I'll continue to keep you updated on this bullish cross, because obviously when we eventually see the bullish cross, that would be very bullish for the price of Ethereum on the larger timeframes. And just giving you a quick update on the Bitcoin dominance chart on the 4-hour time frame, and right now we are still playing out this bear flag, and we've almost reached the price target, which is coming in at around 41.7% Bitcoin dominance. And anytime we see the Bitcoin dominance move to the downside, like what it has been doing recently, during these time periods, the overall altcoin market is performing better than Bitcoin on average. Of course, there's always going to be some outliers, but just on average, the altcoins are doing better than Bitcoin right now. And this is one of the big reasons why I'm currently accumulating more Ethereum than Bitcoin, because at the moment, while the Bitcoin dominance is dropping, Ethereum is simply outperforming Bitcoin. And by the way, in case you haven't already, if you want to get extra updates like this throughout the day, follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. And just before I get into this very important chart, I'll first give you a quick update on the US stock market today. This right here is the S&P 500 index on the daily time frame, and you can see right here that over the past couple days we have seen a short-term pullback in the stock market. But this short-term pullback in the stock market was actually to be expected, because if you've been watching my update videos over the past few days, I've mentioned just a few days ago that we actually formed a gap in the value of the S&P 500 index just a few days ago. And when it comes to the stock market, we almost always fill these gaps in the price, which basically means this short-term pullback in the stock market was somewhat inevitable. But something important to mention is the fact that the S&P 500 index is dropping below the golden pocket again, which is not really a good sign. And if we do see a little bit more of a pullback, then our next level of support is right around here, sitting at about 450 approximately. But also, if we do end up seeing a bit more of a pullback in the S&P 500 index, that opens us up for a possible inverse head and shoulders pattern. As you can see, we've already seen the left shoulder, we've already seen the head, and right now we're potentially forming a right shoulder if we continue pulling back and then see a decent bounce. But at the time of recording this video, an inverse head and shoulders pattern in the S&P 500 index is still speculation, because obviously we haven't even confirmed a right shoulder, at least just yet. But if you're looking at the overall trend at the moment, technically we're still forming higher highs, whether you're looking at these 2 highs or these 2 highs, and we are still forming higher lows as well, which is technically still a bullish trend. But one of the possible reasons why we are seeing a bit more of a sell-off in the stock market at the moment is because the 10-year and 2-year yield yield curve just officially inverted. Now, I'm only going to cover this more briefly because this is of course a crypto channel, so I definitely recommend you doing a little bit more research about this. But even though this is not directly related to crypto, it is very important for pretty much all of you out there, because this right here can have an effect on almost all markets, especially in the United States. So what exactly is this 10-year to 2-year yield curve? It is basically the yield on 10-year United States government bonds minus the yield on 2-year United States government bonds. And this white horizontal line that I have right here is the zero line. So basically, when the 10-year minus 2-year yield curve is above zero, then 10-year United States government bonds pay more yield, more interest than 2-year United States government bonds, which absolutely makes sense, because if you're locking your money up for a longer period of time, it makes sense to be compensated with a little bit extra interest on your money. But anytime this yield curve is in the negative, so below this white line right here, that is when the 2-year bonds pay more interest than the 10-year bonds, which absolutely does not make any logical sense. And so because of that, pretty much every single time where we see this yield curve invert, which is going below the zero line, so meaning that the 2-year bonds starts paying more than the 10-year bonds, we almost always see a recession not too far away. This is mainly for the United States, but can affect other countries. In some examples, like the global financial crisis in 2008. In fact, a recession in the United States has followed every single time this yield curve has inverted since the 1960s. But this chart that I have right here, by the way, only goes back towards around 1988. So this right here is on the monthly time frame, zoomed all the way out. And in case you haven't guessed already, these red zones are recessions in the United States, and normally this carries over to multiple other countries. And you can see that all of these recessions have come just after this yield curve has inverted, so after it's dropped below this white line, the zero line. And so the fact that this yield curve has just inverted again within the last 2 days, this is definitely something important to pay attention to. But something important to mention is that even though we have recessions follow these yield curve inversions, these recessions normally start around 1 to 1.5 years after the yield curve initially inverts. So even though the yield curve is inverting right now, we could still have some time. So at the moment, this is just something to keep in mind and something to potentially prepare for in the coming years. Because even though there are some ways to profit off a recession, for the majority of people, recessions are extremely bad. And for any of you watching this video that do not know what a recession is, please do your research on a recession, because this is a big deal. But anyway, if you got anything of value out of this video, please make sure to leave a like down below. And if you're new to the channel, make sure to subscribe with notifications turned on for more updates just like this every single day. And before we click off, if you want to make more money in crypto, whether or not prices are going up or down, then these two videos popping up right here are definitely made for you. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.